Good morning, everyone. Thank you so much for joining us for this, our first quarterly webinar, talking about all things Bitcoin and particularly our product, the Monochrome Bitcoin ETF, ticker IBTC. We're really delighted to have you with us. And I guess just before we jump into the formal proceedings, I think everyone's been reading the paper in recent months, and there's been lots of news around Bitcoin Treasury plays. So I guess there's two ways of looking at this. One is as a Bitcoin Treasury play, which is a listed entity. So that's your Michael Saylors, your MicroStrategy, MetaPlanet. There's similar plays happening in Hong Kong. And our homegrown players are friends at DigitalX and also Locate Technologies. So there's lots of corporates that are holding Bitcoin and that are doing specific Bitcoin Treasury plays. What we're actually talking about today is positioning, holding a Bitcoin as a treasury asset. And so it's a slightly different lens. And we'll be talking through, I guess, what we're seeing there, what the use case is, and how we feel that the Monochrome Bitcoin ETF might serve that demand. So jumping into the presentation itself, just before I start, I'm going to read part of this disclaimer to cover off some of our legal requirements. So this presentation is prepared by Monochrome Asset Management Proprietary Limited. No representation, warranty or undertaking is given or made in relation to the accuracy or completeness of the information presented. Except for any liability which cannot be excluded, Monochrome, its directors, officers, employees and agents disclaim all liability for any error or inaccuracy in this material or any loss or damage suffered by any person as a consequence of relying on it. Monochrome advises that the views expressed in this material are not necessarily those of Monochrome or any organisation Monochrome is associated with. This report contains general information only and is not intended to provide any person with financial advice. It does not take into account any person's investment objectives, financial situation, or particular needs, and should not be used as the basis for making an investment in the fund. Neither the investment manager nor Vasco trustees make any representation as to the accuracy, completeness, relevance, or suitability of the information, conclusions, recommendations, or opinions contained in this report, including but not limited to any forecasts made. All right, with that out of the way, let's jump into proceedings. What are we talking about? So I'm going to head out. My name is Bridget Nichols. I'm the Chief Commercial Officer at Monochrome, and I'm joined on the webinar by Grayson McLeod, who is our Chief Operating Officer. I'm going to talk through our Bitcoin native status and I guess who we are as a team at Monochrome. And then I'm going to hand over to Grayson. He will talk about IBTC as a potential treasury holding. And what that means, and then he'll hand back to me for a little bit of an overview on our product, which is the Monochrome Bitcoin ETF. We do have some pre-submitted questions, so we'll definitely answer those, but please feel free to use the Q&A or the chat part on the webinar if you have access to that, and we'd be delighted to answer any questions that you have as we go along as well. All right, so we are the only Bitcoin native investment manager in Australia that has an ETF. And our team is made up of a combination of Bitcoin native people and traditional finance people. So good looking bunch there. Jeff, our founder, used to run Binance Australia and founded our business in 2021. And I've introduced myself and Grayson. We also have in the business development team, John Eccles as our Chief Product Officer. Ajor Lim runs our business development function in Asia, and Loretta Joseph is our global regulatory advisor and an expert in this space. Enough about us. Let's actually talk about what we're here for, IBTC and Treasury plays. I'll hand over to you now, Grayson.
Thanks, Bridget. And just checking, can you guys hear and see me all right? All good? Sweet as. Let's get into it. So once again, my name's Grayson. I sit on the ops team in the engine room of the ETFs. And if you've ever called up, you've probably spoken to me on the end of the line. So thanks again for being here. And we're excited to be presenting to you today. So IBTC as a treasury holding. Now, I should start off by saying I've been fortunate enough to see a few Bitcoin cycles now, and every cycle is more or less punctuated by a new way of coming into or storing Bitcoin. And I don't think anyone's under any illusion, this is the era of the ETFs. A bit of a meme on every Bitcoin cycle is the institutions are here. And I think finally, for once, we're actually starting to see that in the form of companies putting Bitcoin on their balance sheets. It's not just a speculative asset for individuals anymore. It's a real asset that serves a real purpose in a diversified portfolio. So, why? What is Bitcoin's value proposition? So, it's no longer a fringe asset, it's in the mainstream, and big companies and corporations are really looking at it for a number of reasons. Um, One thing to note, which is pretty cool, the market cap of the ETFs and MicroStrategy alone is the same size as the market cap of Bitcoin at its peak back in 2017, which is not too long ago. Um, what this shows is just the absolute, maturity and scale at which Bitcoin now operates, and the amount of liquidity and the amount of volume that can come in without drastically changing the price means that it is now actually suitable for these big players to start coming in. As a transactional asset, companies might build up a stockpile of Bitcoin, having received that Bitcoin for payment. Um, Things like the Lightning Network are trying to scale this properly, and I think that is working. But today's conversation is more about just having it sitting there as an asset for long-term store of value. Um, Alternative for cash, uh, this really should say high inflation rate environment. Cash, like, I don't think MD1's under any illusion that, we're seeing all-time high rates of inflation. Like ever since 2020, this is a pretty cool statistic. I believe it's something like 80% of US dollars have actually come into circulation. Um, it is a runaway train, and people are turning to a scarce asset like Bitcoin to hedge against that risk. And what we've seen is allocating even a small proportion of Bitcoin to a treasury introduces that store of value dynamic while maintaining quite a big upside potential. So this is that Sharpe ratio value where we talk about what is your risk adjusted return, or at least what is your volatility adjusted return. Um, Also in capital markets, we're starting to see Bitcoin become more accepted for things like lending, particularly in the form of an ETF where it is treated the same as any listed product that is familiar to lenders and banks, and it is a good merging of the two worlds. But we'll touch on that more a little bit later. Um, Bitcoin also protects against geopolitical risks. So one of the other prevailing memes throughout the years has been China banning Bitcoin. I think this is, people accept that this is now FUD. A government cannot ban Bitcoin. It can only ban itself from Bitcoin. Um, and this is actually a benefit of Bitcoin. It has no ties to any government. It is a completely, uh, what's the word I'm looking for? It is a anti-sovereign, or it removes itself from any government risk, essentially. Um, and when you think about it, most portfolios are in one way or another tied to the prevailing government in that jurisdiction. So Bitcoin is another way to slightly remove from that and have something in the portfolio that is another diversifier. So why are treasuries rethinking cash? Once again, you're having interest rates falling while inflation is increasing. This comes back to central banks only having two levers to pull on. They can either raise or lower rates, or they can print money. And what we're seeing now, especially since COVID, is the rates are still tending towards zero, and inflation is out of control. Bitcoin was made to fix this. Um, as a scarce sovereign asset, that is completely removed from any central bank manipulation. It is a tool for inflation hedging. Once again, Bitcoin corporate adoption has tipped critical mass. 688,000 Bitcoin in public companies. I think that number is actually way higher now. Something pretty cool that you guys should check out is bitcointreasuries.net. This is a website which actually, I'll just bring it up here, shows all of the companies that hold Bitcoin on balance sheets, and it's been very cool to watch it grow over the past few years. And there would be way more companies on here than it actually says. Like private companies that are not listed that hold Bitcoin, like this is just going to keep growing. Once again, cash being weak, so definitely in the mainstream narrative now is the fact that cash sitting idle is a big problem for companies. Going back to interest rates, like if your note on a bond is less than 7%, then you're going backwards. Having a fixed term deposit or some kind of 4% per annum note, like that is not enough to outcompete the erosion of the denominator. The dollars that it sits on. If you're not getting more than 7%, you're going backwards. And this is another reason why people are putting Bitcoin on the balance sheet. Finally, this ESG angle. I mean, I think it's another one of these narratives that's turned around recently, particularly between like 2017, 2021. We saw a lot of narratives about how dirty Bitcoin is. That's completely been debunked now. Most of the mining is done, either by gas flaring, which is good, or some kind of hydro. Ultimately, Bitcoin is a wholesale energy market, and the most efficient way to mine it will ultimately prevail, and that is what we're seeing. So, accounting clarity. Bitcoin directly, yeah, Bitcoin directly is treated as an intangible asset under the IFRS, the International Financial Reporting Standards. But Bitcoin in an ETF like IBTC is treated like a financial asset. So it is marked to market through P&L, and it is a lot more easy to audit and to account for. So there's a few things here about the differences, but the biggest thing to take note of is that IBTC dramatically reduces the friction for those corporate structures when you're accounting, because you have all of your statements, all of your NAV, and all the numbers that you need in one convenient place. And there is no auditing on the actual private key control because it's part of that whole system. Now, this is probably my favorite part. When a corporate treasury wants to buy Bitcoin, in Australia, the only way for the past few years would be to buy on an exchange. What anyone who's ever bought on an exchange will know is there's a number of problems that they can come up with. So you may be debanked in the worst case, or in the best case, you'll have your transaction amount limited to something like $10,000 is the most common one. It is important to note exchanges in Australia are unregulated. And this is why the banks don't like you sending money to them. In our case, as an actual regulated product, you can trade unlimited amounts. So what we've got here, this on-screen depth, this says something like 450K a day. It's actually been a bit more than that recently. But the main thing to note and the main thing to take away is that what you see on screen, the units available there, is not the cap. So if you place an order that's bigger than what you see on the ask, maybe let's say 50,000 units, the market makers are tabled such that they have to facilitate those orders. Now, this is a key point because what it means is, in combination with this next point, the fact that you can bring Bitcoin out of our ETF, if you can buy unlimited Bitcoin on market and then withdraw that Bitcoin ETF, IBTC is essentially a listed OTC desk that anyone can go and buy unlimited amounts of Bitcoin from and then withdraw it to their cold storage. The inverse is also true. So if someone has a lot of Bitcoin sitting on an exchange, they bought it 10 years ago, now it's worth 5 million bucks, and they realize actually exchanges are unregulated, and I don't want to hold this in my sock drawer on a cold wallet. I can put that into IBTC in a regulated product and have all of my statements in one convenient place on my ComSec account with everything else.
Hey, Grayson, I might just interrupt you there. We've had a question through. Thank you, Michael, for sending
Okay.
through your question. It is, hi team, how does IBTC's in-kind facility work for a company or fund that already holds Bitcoin? So I think it's sort of this point you were just talking to under the 4 in-kind pathways, Grayson. So
Awesome. Yeah.
maybe if you wouldn't mind going over that for Michael. It's a great question. Thank you.
Yeah, no, 100%. So very easy. In fact, if your company holds Bitcoin offline and you want to put it into our ETF, it is as simple as KYCing with the unit registry. We use Automic. Um, we then send you a deposit address. Your Bitcoin is unitized overnight, and your units are issued the next day at the price of our benchmarks. So it's not a case of like you tell us a price and we give you a specific price. It is based on the benchmark price of your Bitcoin, and that is how your units are given. Once your units are with Automic, the registry, you can then move those across to the brokerage of your choosing, whether it's ComSec, NabTrade, CMC, or whatever. And then they just sit there. It is as simple as that. But happy to chat afterwards. Like always, feel free to call up and always happy to talk about our processes or Bitcoin itself. Is there any other questions, or should I keep chugging along?
Please keep going, mate.
Yeah. Just on this last point here, no derivatives, no rehypothecation. Part of having this institutional grade and regulated product is that we had to sit under the magnifying glass of the exchange and also ASIC, and we had to prove that the Bitcoin just sits there. We don't take any directional trades, we don't do any derivatives on top of it, and we do not move your Bitcoin around. It sits there. Um, and this comes back to the point of exchanges. You don't know what they're doing with your Bitcoin there. And this is what we've seen over the years with all of them blowing up. Like there is no oversight. So it is key as a regulated market operator that there is no funny business happening with the Bitcoin. And as a Bitcoiner, that was one of the main points that we wanted to embed when creating the product. Next slide. So just a bit about the foundation of the ETF. So our custody is handled by Gemini. Gemini are OGs in the space. They actually filed for the first Bitcoin ETF back in 2013. Unfortunately, it did not go through, but they are more than comfortable with this type of thing. When we went shopping for custodians in the beginning, these guys stood out and were absolute champions. They came up with their RG133 custody report, which essentially says they're up to Australian standards. And along with that, you have the SOC 1 and SOC 2 auditing by Deloitte, which happens annually, just going over their operational processes. Once again, if anyone has any questions or wants to chat after this, I love going over the custody because it's pretty much the key thing about the ETF. The ownership structure, and this is how the in-kind actually works, is a bare trust. So you as the unit holder or the company as the unit holder has direct ownership of the underlying asset, which in this case is Bitcoin. More or less, this is a pure Bitcoin product. And I just want to nail this home. This is not just a financial instrument for tracking the price of something. This is a Bitcoin product. The way I like to imagine it is it acts less like an ETF and more like a cold wallet that you can see on your ComSec. And that's due to this ownership structure. Fun fact, we actually found this out from an old gold ETF that was structured as a bear trust and had that redeemability feature. Um, just a little piece of info there. And then finally, this oversight and monitoring. The beauty of a regulated product is there's multiple parties specializing in their specific thing. So custody with Gemini, unit registry with Automic, fund administration, which is the calculation of the NAV, et cetera, with State Street. All of these parties come together and they're all, to an extent, pointing a gun at one another, saying, you're not going to do any funny business. And if we see you doing any funny business, then it gets reported immediately. That is the beauty of having an actual regulated product, as opposed to a FTX or a BlockFi or an exchange where the custodian is also the registry, is also the trading desk. You have this incestuous relationship, which is a recipe for disaster because um, it's all under one roof. And that is where this oversight and monitoring comes from. And that is why it is so important to go through these regulated steps to prove that, that robustness of separated parties to make sure that, everyone's got oversight of everything and everyone's keeping an eye on one another. This is just a little chart to kind of portray the impact that Bitcoin can have. I think we're all aware that this is the only game in town at the moment and the type of numbers that Bitcoin can pull. But just as an example, that is only a 5% allocation, albeit it is from 2010. So um, you'd be very lucky and very happy to have 2010 Bitcoin in your diversified corporate balance sheet. But just as an example, you can see the Sharpe ratio gets way better the more Bitcoin there is because you have more upside with that volatility. And then just to nail it home, so why IBTC for a corporate treasury? You have a regulated product. It is all there in one convenient place on your brokerage. IBTC is the lowest fee ETF in APAC, 0.25% per year, and it is the only ETF globally that actively facilitates Bitcoin Direct in-kind ins and outs. So some of you may have seen that Fidelity this morning, they put out a post saying that they've filed for in-kind ins and outs. I just want to make the point that these US ETFs that are filing for in-kind in and outs, you don't know if that's for the end investor or just for the APs. People should be very careful when buying these ETFs just on the basis of that, because when we built this ETF, there was a clear distinction between what the APs can do and what the end investors can do. And all of these filings they don't speak to exactly who this applies to. I suspect it is just the APs because when the US ETFs were being launched, that was the main point of discussion was that the APs could only do cash, creates and redeems, and not in kind. And now it's come to that point. But I digress. Feel free to ask questions afterwards. More than happy to go on about it. Direct ownership through the Bear Trust, daily liquidity. Once again, you can come in and out of this Bitcoin ETF very easily on the day, and simple accounting and tax treatment. No CGT, assuming that there is no change in beneficial owner when you're coming in and out with Bitcoin. Generally speaking, you should always check with your tax advisor and read the PDS. But generally speaking, if there is no change in beneficial owner, there is no CGT event when pulling Bitcoin out of this ETF. And custody challenges. The beauty of it is like I'm not going to tell anyone to not store their own keys. I think it's great. I think that's what Bitcoin is made for. But at least you should have the option to pull your Bitcoin out or put it into the ETF if you want to diversify the stack. Ultimately, at the end of the day, it is there for you if you want it. Beauty. I'll pass it back to Bridget. Sorry if I was rambling a lot there. I get very spirited about this because it's awesome.
Spirited is good on a fine Thursday in Sydney. Thank you, mate. So just before we finish, I just want to give a really quick overview on our product. We've already touched on most of the main things, and I think if you're with us today, you're probably already familiar with the Monochrome product. So I won't belabor this, but look, if you look at the chart on the right, you can see that our assets under management has scaled quite quickly over the last probably 6 to 8 months. That's, we think, for two reasons. One is we believe we're emerging as the market leader in this space in Australia, and we believe that we have a superior product in the market. And the other thing, which is fairly obvious, is Bitcoin's performance has been very buoyant. So performance does drive flows. But so does, having an excellent product, and that we do. I think we've mentioned, but our product is listed on the CBOE exchange. Our assets under management are now 174 million, as at, I think, this morning. And as Grayson mentioned, we are the lowest fee Bitcoin ETF in the APAC region at 25 basis points. This one here just nicely shows just how well we track to the price of Bitcoin. So you can see sort of on that left chart that the orange line and the blue line are on top of each other. And that's where we want to be. So we want to be as close to the price of Bitcoin as possible. And you can sort of see from that line and also from our tracking figures just how well we do that. We think the reason why we do that so well is because of the strength of our benchmark and the strength of our execution processes that we have in the fund. For those that are not aware, we use a CME product called the Bitcoin Reference Rate, the Asia Pacific variant, which has struck Hong Kong time 4 o'clock. And essentially, this is a regulated benchmark by the Financial Conduct Authority in England. And so what that means is the methodology for the calculation of that benchmark strike is published and is audited. So essentially, if you're interested, have a look up on the CME website and the methodologies there. But essentially what they do is pull a large amount of data from several different global exchanges and aggregate that data to find what their rate says is the best Bitcoin price at any moment. And that's how we do our strike. So a number of the other Bitcoin ETFs globally use this benchmark rate, use this same product. So, the BlackRock product uses it. And I think we have a peer in Australia who uses it as well. So it's an excellent rate. And then if you, I guess, look on the right side of this page here, you can sort of see what performance has been doing over the last periods. So clearly the 1 year performance is very healthy, as is the 2 year, and things go up and down a bit. Bitcoin is inherently more volatile than equities, but that is part of its reward profile, and we manage that very successfully in the ETF structure. So that's that one. And look, I think Grayson's talked about this, and this is sort of your question again, Michael. Yes, we do take Bitcoin into the fund. So we can take Bitcoin in, we can take cash in, and we can send out Bitcoin and we can send out cash. So it's really neat. We think we're the only ETF in Australia that does this. Globally that does this. So there are others around, and look, we don't speak about other products, but we're certainly doing this daily. And we're getting a lot of interest from the Bitcoin community in coming into our ETF, which is extremely exciting. And this one's, really critical for sort of total return numbers. We want this tracking error to be as low as possible. And as you can see, that is a very low figure there. So we're comfortable with where that's at. And we've already spoken about this, but clearly this cost element is very important to your total return as well. And we're currently 20 basis points below all of our Bitcoin ETF peers in Australia, which is a nice place to be for our investors. And just finally, I think we've spoken about this. This is just a little bit more about our benchmark. So we think it's really important that it's regulated, and it is audited, and it's it's a verified Bitcoin price. So yeah, it's procured by us at great expense, and we think it's excellent.
Can I just add a point onto that benchmarking slide?
Please
So
do.
the beauty of and I really want to hammer this home, a regulated product is this benchmarking aspect. So anyone who's buying Bitcoin is essentially trusting the operator of the vehicle that they're purchasing from, right? So whether that's an exchange or an ETF. If you go with an exchange, because they're not regulated, you end up just trusting the price that's on screen. And this is a pretty big issue in Australia, particularly because the AUD market is actually not that big. What that means is if you actually look at the different exchanges here, you'll see a very wide, difference in price between all of them. So that was one of the things that we aimed to fix with our ETF, and CF Benchmarks helped us do that. Essentially, we wanted to create the most reliable BTC AUD price imaginable, and we did that by combining their BTC USD rate at the exact same time as the Reuters AUD USD rate, and combining the two. So you have the two most liquid markets at the same time. And by having that, we have a transparent BTC AUD price that can be trusted. And also, we cannot have any hidden fees on that. So that 20 basis points that you see in the PDS is exactly what it is. That's what it costs to execute. And we don't take anything in terms of slippage or, counter trading or whatever in between. What you see is exactly what you get. Just wanted to make that point.
Thank you. I think this brings us to the end. So I've just flashed up this one. Look, if anyone on the line is interested, we have a really professional series of research that we've developed, and it is available publicly on our website. So please do read it if you're interested, and we're very happy to discuss any of it with any interested parties. And the other thing, just to mention quickly, is if we do have any financial advisors on the line, we have what we call a Bitcoin certification program. So what that is we essentially put you through this series of research, and at the end we give you a small exam, and provided that you meet the pass rate, we sort of give you a certification. And some of our advisors may wish to use that in their own marketing to their clients. But it's just a neat way of I guess putting a bow around our education piece. So we're quite proud of that program. And so that brings us, I guess, to the end section of this. And I see that we do actually have a couple of questions. So thanks, 61, and thank you, Calvin. Um, Maybe, Calvin, I'll read your one out first. So the question is, understand that Monochrome is a private company, but can you provide any detail on business profitability and viability, i.e. given the low 25 basis point management fee on IBTC, what scale is required? So look, that's an excellent question. We don't really talk about, I guess, our finances publicly, given that we are private. But certainly before we changed our fee and made it lower, we did some modelling around the impact that that would have on the Monochrome business. And we're very comfortable with the scale that we're currently at. And we will continue to scale our product. It's scaling more quickly in recent months than it, I guess, had been in 2024. And in fact, I'm very proud to say that a year to date, we have grown the fastest vis-a-vis all our peers. So we've been publishing some research, some data points on that. If anyone is interested, just have a look through the Monochrome LinkedIn, and you can see, how quickly we're growing. So thank you, Calvin. Great question. And then back to your question, 61. Could you explain the timeframe and fees for an in-kind redemption, broker to cold storage, and if there is any minimum amount for this? Grayson, can I ask you to answer that one, please, mate?
Yeah, no worries. So the question kind of depends on the complexity of the entity that is doing the redemption. So the main steps that take time are just getting the right accounts opened. So when you go to do an in-kind redemption, there's two steps. First of all, you have to sign up with Automic, our unit registry, because that is where all the paperwork is facilitated through. And secondly, you have to sign up with Gemini, our custodian. Now, the reason we do a Gemini withdrawal is to make sure that one, it's not a third-party payment, to protect people from doing a change of beneficial ownership, and two, to make sure that the address is correct. Um, what we've seen, with experience from exchanges is, it's very easy to fat finger addresses. So this is just another way for us to four eyes and make sure that it is correct. Um, Once your Bitcoin is delivered to your Gemini account, you can withdraw that to wherever you want. That is now your Bitcoin. Um, and thirdly, I guess I should also say the reason for doing it to Gemini is because it allows us to have another step in verifying that the redeemer is actually who they say they are and not just someone trying to get someone else's Bitcoin. That is what we want to prevent. So to answer your question, if you're an individual, you can sign up to Gemini and Automic within a day. If you're a really complex entity, I would say about a week, maybe 2 weeks if it's really nasty. But ultimately, we are always here to expedite things with Gemini, and we can help you throughout that process. Ultimately, we love people seeing take custody of their Bitcoin. Uh, it's, it all comes back to why we're doing this for the love of the game. If you want to take custody of your Bitcoin, you should be able to do that. So, yeah, anywhere from 2 days to 2 weeks, but it depends on the entity. Either way, we're always here to help.
Thanks, mate. And we've got a couple of others through. So thanks everyone for sending these. It makes it a bit easier for us answering things you want to know. So Diego, thanks for your question. So you would like us to explain the risks associated with keeping Bitcoin on an exchange. Oh no, sorry, you're saying that was clear. Could you now elaborate on the advantages of using IBTC compared to holding the asset directly in cold storage? Grayson, can I throw to you for that one as well, please?
Yeah, 100%. So the main reasons that we've seen people come into the ETF is one, if they already have an existing stack that has grown to the size at which they think, okay, I at least need to diversify this holding. That doesn't mean necessarily putting all of their Bitcoin into the ETF, but at least some of it just in case. The second point is estate planning. So people that have a stack for, their kids' college funds or whatever that they definitely don't want to misplace the keys for, and that they can easily give to their kids. They put it in the ETF because then it just becomes the same process as transferring shares, and it's as easy as that. Similarly, if you have a very complex multi-sig setup and something bad were to ever happen, um, I know for sure my parents wouldn't be able to figure that out. So having it in the ETF makes it a lot easier in that situation. God forbid it ever does, but it's something to think about. Um, Ultimately, it just comes down to, the ease of storage and the diversification. And another point I would actually add, and this is something that we'll be hammering to market in the next few months, is if you want to borrow against your Bitcoin, which is something that every Bitcoiner has ever dreamed of ever since the light bulb went off, um, in an ETF, you can actually, in theory, get better rates and borrow against it in a way that your Bitcoin is never moving. So what we're seeing, in the US, JP Morgan starting to lend against BlackRock ETF, yada, yada, yada. The problem with these ETFs is that you can't put your Bitcoin into it and then borrow against it as you would an equity. Um, a reason why someone might put their Bitcoin into the Monochrome ETF is so that they can borrow against it as an equity. And this is something that we do want to, you know, talk to you guys about probably in another webinar, but it is something that is happening, and it's very exciting. So that's another reason.
Thank you, mate. And 61, thank you for your second question. I've just shared Grayson's X handle for you, so please follow him on Twitter if you'd like.
Don't go too
Um,
far back because you'll see all the crazy psycho Bitcoin tweets from years ago.
um, I note you haven't asked for mine, but if you want mine, I'll send it through. Daniel Murray is asking about Japan. So yeah, look, Japan has been slow. So obviously, crypto ETFs aren't allowed in Japan at the current time. So our CEO and founder Jeff was over in Japan, I think a month or two ago at a big conference, and obviously speaking to people about the state of the deregulation and all of that stuff. I guess to answer your question quite quickly, we're very interested in Japan as a market. Japan has an enormous ETF market. That's probably why you're asking that question. We watch the Japan market. We would love to be there. But yeah, look, we would work with a partner if we entered Japan. So we've got some discussions that are ongoing on that front. Rightio, I think that's it for the live questions. We did have some pre-submit, so I might rattle through those as well, just quickly. So Mark, thank you for your question. You're asking us about if we think that the Australian regulator will require onshore cold storage for digital assets. So I guess only ASIC can really answer that. My personal view is that is unlikely to occur. And the reason why I say that is because the specialist digital asset custodians predominantly reside in the USA. And they're the companies with all of the experience and all of the, real world experience around this. So to mandate an Australian custody requirement to me seems like a strange regulatory result. That said, we can't speak for the regulator. So if they did do that, I'm sure that the US entities would find a way to have custody in Australia as well. I don't know, Grayson, if you've got any alternate views on that one.
Not really. I mean, when we created the ETF, there was actually no custodians in Australia which met the custody standards, and that's why we had to go shopping. But thankfully, like once again, Gemini came in and they smashed all the questions, and we're up to standards, and it's been really good so far. Um, we we do have a carve out, like we had to present to ASIC and say this is why an overseas custodian is still suitable. So we've been through all the checks there, and ultimately like, we're comfortable with their processes, and it's secure enough that we can run this thing with peace of mind.
Yep. And thank you, Arthur, for your question. So I'll just read it out. We run a financial advice practice and are looking forward to being able to advise in this space in the foreseeable future. What can you share about what you see happening generally in the advice space? So fantastic question. I guess my observation is there are still some challenges for financial advisors in this space. And the main ones that I guess get raised with us are around A, whether people feel comfortable to advise on this asset class. B would be professional indemnity insurance. So does the advisor's professional indemnity insurance cover advice around, an ETF that holds digital asset? And I guess in relation to the insurance, there's solutions out there. If financial advisors want information on that, please reach out to us because we've got a number of insurers that will provide that insurance. Sorry. And I think the other thing is just, and particularly, I don't know if there's any financial advisors on the line that are from big firms. You need to get on the approved product list, so the APL for that brokerage house. And sometimes that involves investment committee approval and sort of formal things at the brokerage house. And so, whether people want to do the work on that for Bitcoin ETFs at the moment is a question mark. I mean, my strong recommendation, albeit biased, is that people do the work and they have those conversations, and they place Bitcoin ETFs on the APL. And I think Grayson did a really good job of explaining, some of the value proposition around investment in a Bitcoin ETF. So I hope that gives you a little bit of a view, Arthur. I do think things are slowly changing. We're definitely getting, I guess, as Monochrome, a lot more inbound inquiry from financial advisors, which we love. So please, if you are a financial advisor and you want to know anything, just reach out to Grayson and I. But yeah, look, I think it's changing, Arthur, and we hope we hope it'll change with an increased cadence. But it's up to being. I think probably the solution is investor led. So if enough investors tell their financial advisor that they want this product, that advisor is going to get the product on the APL. It's as simple as that. So there's some of the things, Grayson. I don't know, have I missed anything from your conversations
No,
around?
I think that's right. Like one of the big takeaways from Bitcoin 2025 in Vegas was that it's very similar in the US where advisors are only just starting to really get their hands on this thing. And similar to the point where I said earlier, every Bitcoin wave is punctuated by a new way of onboarding. I feel like the next step, the next wave will be punctuated by advisors actually being able to recommend Bitcoin products with a solid foundation of understanding of Bitcoin. It's definitely an education piece, and thankfully we've got great guys like Arthur out there who understand Bitcoin and who are championing it. But it's just, one step along the road. So, it'll happen eventually, and we'll be here when it does.
Absolutely. We'll be here with open arms. That would be excellent. Um, okay, and so we have, I think the last question we have is from Greg. So Greg's asking, still confused about the difference between VBTC, EBTC, QBTC, BTXX, and IBTC. I've heard some of them offer redemptions into cold storage wallets. Would you dive deeper into this? Yeah, so great question. Look, we specifically don't talk about other people's products. So if you're interested in those other products, please seek information from those issuers. I guess as far as our own product and how we think we're superior in the market, it goes back to some of those things that Grayson mentioned. We have a bare trust structure, which facilitates our in-kind in and out mechanism that we've spoken about a few times. We have the lowest cost, by management fee by quite a long margin. And we're the only Bitcoin native player in this space. So the other investment managers that have products are all traditional finance plays. We are a Bitcoin native player, and we're very proud of that fact.
Greg, I would just note we are the only one that offers in and out, and we are therefore the only one that is a true Bitcoin product. This is not just a tracking vehicle. This is a Bitcoin product. You, as the unit holder, own Bitcoin. Um, and that's the only game in town.
Yep, and I think just for our final one, we have one from CoinFlare. Why are IBTC the only ones with two-way, and can others implement this in the future? So that's a great question. The short answer is to be able to implement the structure that we have, you would need a responsible entity with the license type, the right license type to facilitate that. So it's, I guess, possible that another one could enter the market in Australia, but we think that that is fairly unlikely, if I'm honest. So I know, Grayson, if you've got anything to add there.
Yeah, look, I mean, like it all comes down to the bare trust. To an extent, we uh we have a bit of a jackpot product because the opening for the AFSL variation that allows us to run a Bitcoin Direct ETF in Australia seems to have closed. And like I said before, in the US, the in kind that they speak to is likely just for the APs. So we may be sitting on the only ETF in the world that can ever do direct in kind in and out. And it comes down to that regulatory moat that, it took us as Bitcoiners to figure out, hey, this is this is an incredible structure that we can do everything we want to with. And that's where we ended up with. So I I would see it as unlikely that anyone else can do this, but you know, we'll see. And ultimately, I hope that they can, because there's a lot of people with Bitcoin trapped in ETFs that can't otherwise get it out other than having to sell and cop that CGT event. So, for the sake of the holders that were, for lack of a better word, duped into just a tracking product, I hope they can convert to an in kind out situation.
Cool. Well, look, we've just about time. So if you've stuck with us, thank you so much for giving us 51, 52 minutes of your time. We are delighted to have spoken to you today. Hope you have a fantastic rest of the day. And as we've said, if you want any further information, please reach out to us directly. See you later. Bye-bye.
Thanks, everyone.
Bye.
Adios.